What if I told you that turning just $100 a month into $1 million isn't magic, luck, or some complicated secret that only rich people know? What if the real secret is something almost boring? Something so simple that most people ignore it because they think it can't possibly work.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
Today, you're about to see the real math behind how ordinary people slowly, quietly, and steadily build millionaire-level wealth using something called DCA. And by the end of this video, you'll understand exactly how it works, why it works, and how long it actually takes, using real numbers, not hype. Before we dive into the math, here's a question for you. What would you do if you became a millionaire slowly and steadily? Not overnight, but with complete confidence that it will happen? Would you retire early? Help your family? Start a business? I want you to drop your answer in the comments and tell me the first thing you'd use that money for. Your answer might surprise you. All right, let's break down DCA in the simplest way possible. DCA stands for dollar cost averaging. It basically means you invest the same amount of money on a regular schedule, like $100 every month, no matter what the market is doing. Prices go up? You still invest $100. Prices crash? You still invest $100. Over time, this smooths out the ups and downs and lets you grow wealth without trying to predict anything. Now here's where people underestimate this strategy. They hear $100 a month and think, there's no way that can turn into something big. But mathematically, it can. It already has for millions of people, and it can for you too. But the key isn't the amount. The key is time plus compound growth. Let me give you a simple example. If you invest $100 a month for 1 year, that's only $12,200. Nothing dramatic. But stay consistent for decades, and the math becomes almost unbelievable. Let's take the long-term average return of the stock market, about 10% per year. Not 50%. Not 100%. Just 10%. With that return, guess how long it takes for your $100 monthly investment to reach $1 million? The answer is around 42 years. And some of you might hear that and think 42 years? That's too long. But wait, before you jump to that conclusion, think about this carefully. First, 42 years will come whether you invest or not. Time passes no matter what we do. The question is, do you want future you to have $1 million or not? Second, many people already invest for 40+ years without realizing it. Your job might already be taking part of your paycheck for retirement. But the most important part is this. You don't have to wait 42 years to see amazing results. The first few years feel slow, but after that something magical begins to happen. The curve bends upward, and suddenly your money starts growing faster than you can save it. Let's break this down step by step so you can really see how powerful it is. In 10 years, your $100 per month becomes around $19,000 of your own contributions. But with growth, you'll have around $19K of growth on top of that, bringing your total to almost $39,000. That's already double what you put in. In 20 years, you would have contributed $24,000 total, but it grows to around $75,000 in profit, giving you close to $99,000. You're already seeing the power of compounding working harder than you are. By 30 years, your total contributions would be $36,000, but your investments could be worth about $228,000. That's nearly $200,000 in growth, money that came from time, not from your pocket. And then comes the craziest part, the last 10 years. In those final 10 years on the way to 40, your money multiplies dramatically. Without you increasing your monthly amount, your investment can jump from around $350,000 to over $1 million. The biggest growth happens at the end, not the beginning. Here's the secret nobody tells you. People quit too early. Most people judge the results based on the early years, when the growth is tiny. But the real explosion happens near the end. And that's exactly why DCA works. It keeps you consistent long enough to reach that explosive stage. Think of it like planting a tree. The first few years you barely see anything. Then suddenly it becomes huge. Wealth works the same way. It feels slow, slow, slow. Then suddenly it feels like it came out of nowhere. Now, here's a question for you. Why do you think most people quit investing during the slow growth phase, even though the big rewards come later? Is it patience? Lack of information? School never teaching this? Drop your answer in the comments. I really want to know what you think. Let's make the math even more interesting. What if you increase your monthly amount just a little? Instead of $100, imagine investing $150 or $200. Suddenly, the timeline changes dramatically. At $200 a month, you reach $1 million not in 42 years, but closer to 35 years. 7 whole years earlier, just by adding $100 more per month. That's the price of 2 dinners, or a gym membership, or a streaming service bundle. Small changes make huge differences when time multiplies the results. Here's another twist. What if instead of 10% annual returns, you average 12% because you take advantage of low-cost index funds or periods of strong market performance? That might shave off another several years. Suddenly, your millionaire target hits in your late 40s instead of your 50s or 60s. And here's something even more mind-blowing. If you invest $100 monthly but you start very young, let's say age 20, instead of stopping at 1 million, if you keep going, you don't just hit $1 million, you hit multiple millions. That's the magic of compounding over long periods. Let's look at the numbers. If you start at age 20 and invest $100 every month until age 65 at 10% returns, your total contributions are only $54,000. But your final amount? Around $1.1 million. If returns average higher, like 11% or 12%, your final number jumps significantly. Now think about this. If you're someone who always thought $100 a month can't do anything, these numbers should completely change that mindset. Wealth doesn't come from big, flashy moves. It comes from small moves repeated consistently for a long time. Let me ask you something important. What age do you think is the perfect age to start investing? 18, 25, 30? Or do you think it's never too late? Drop your answer in the comments. I want to see how many people believe time is their biggest asset. But let's talk about something even more powerful. Consistency during market crashes. Because this is where DCA becomes almost unstoppable. When the market drops, your $100 buys more shares. And when the market recovers, because historically it always has, you get a massive boost. The biggest investment gains often come right after downturns, and DCA positions you to benefit from them. Most people panic during crashes. But DCA investors, they quietly buy the dip without even trying. Every month, automatically, no stress. Let me give you a scenario. Imagine the market drops 30%. Most people freak out. But guess what? During that dip, your $100 suddenly buys way more units of the investment. When the price climbs again, your existing shares rise, and those extra shares multiply your profit. That's why people who DCA through downturns end up with more money than people who try to time the market. Speaking of timing the market, here's a powerful question. Do you think it's better to invest at the perfect time or to invest consistently even at imperfect times? Tell me what you think. The real answer might surprise you. Now I know what some people are thinking, but what if I start late? The good news is DCA still works. You might not hit $1 million with $100 a month if you start at, say, age 45, but you can still build six-figure wealth. And if you increase your investment amount, you can close the gap fast. Starting late is not a failure. Not starting at all is the real problem. And here's something I want you to remember. Your first goal doesn't have to be $1 million. What if your first goal was just to reach $10,000? Then $25,000? Then $50,000? When you break it down, it becomes less overwhelming and more achievable. Small wins add up. Before we continue, if you're enjoying this breakdown in simple language and you want more videos like this, videos that actually show real math, real strategies, no hype, make sure you hit the like button, subscribe, and share this video with someone who needs to see it. And while you're at it, answer this in the comments. What's the #1 money habit you want to build this year? Let's go deeper. Imagine you start DCA today. Future you will look back 10 years from now and say, "Thank God I started." The only people who regret investing are the ones who never started at all, not the ones who started small, not the ones who started late, only the ones who didn't start. Here's something most people don't realize. Over 70% of millionaires are ordinary people with ordinary salaries who invested consistently. They didn't win the lottery. They didn't invent anything. They didn't get lucky. They used time and compound growth as their secret weapon. Let's talk about emotions. DCA removes the emotional roller coaster that ruins most people's investment decisions. Instead of worrying about when to buy, you buy regularly. Instead of trying to predict the perfect moment, something even experts fail at, you let time do the heavy lifting. So ask yourself, why do you think people avoid simple strategies like DCA and chase risky, complicated shortcuts instead? Is it impatience? Overconfidence? Or do people just prefer the illusion of fast success? Drop your answer in the comments. I'm genuinely curious what you think drives this behavior. Now, one final thing, DCA doesn't mean investing blindly. It works best when you put your money into long-term diversified investments like low-cost index funds. These track the overall market, which historically has always grown over the long run. You don't need to pick individual stocks. You don't need to gamble. You don't need to be perfect. You just need to be consistent. To wrap this up, I want you to visualize something. Picture your future self, the version of you 10, 20, 30 years from now. That version of you is living with the results of your decisions today. The money you invest now is the gift you give to your future self. And trust me, that version of you will be grateful you started, even if it's with just $100 a month. So here's the final question I want you to answer in the comments. After hearing all this, what's stopping you from starting DCA today? Fear? Confusion? Not knowing where to begin? Whatever your answer is, share it. Because the moment you face it, you're already closer to breaking through it. And if this video helped you understand DCA in a simple, clear way, don't forget to like, subscribe, and share it with someone who needs to hear this. Your small action might help someone else start their journey toward financial freedom. Thanks for watching, and I'll see you in the next video.